Good morning, folks. How are you? Okay, obviously today we have the Canadian employment and unemployment rate at 8:30, a couple minutes from now. We do have some issues with the FOMC um, speaking in Eurogroup meetings, which has caused some concern for the London session. It was rather muted on the 4:30. I was waiting for a little bit more movement based on the goods trade balance and not so much the construction or consumer. I gave you some levels to watch in case we hit those last night. Nothing really came to fruition off of that. So our focus really is going to just be on Canadian dollar and the effects of the release at 8:30, and we'll study the manipulation that takes place in that pair. Let's go over to, and we won't be here long. It'll be a short session today. Let's see here. All right, I think we're going to probably, depend upon what we see with this level in here. Let me get this shrunk up here. We have an order block that's sitting right here. Okay, and I think we're at least going to try to go down and hit it. I personally think we're going to go through it. As much as I don't want to be a seller of cable, I think we're probably going to run through this order block. I don't know if we're going to have enough steam to get through this over here, but I think we'll probably come down here and stab through that. I got a couple more minutes. I can look at CAD in a second. The Euro ran the stops we were referring to the other day. Small little movement up. I think we're probably going to, much in the same way with the cable, we're probably going to want to look to close in that range. And the reason why I'm thinking that is the dollar has its liquidity void up here. And we'll probably see that want to close in. So forget the wick over here. We could see it run as low as this on the upside. Rather, let me fix that. So we could see it run to 95.50, and if it wants to go a little bit more, it can come up into 95.60. So 95.50 to 95.60 dollar if we get any kind of movement this morning on the heels of the Canadian unemployment numbers. Aussie. Now that 77.25 liquidity makes a whole lot more sense now, doesn't it? So we'll be teaching with this model here in one of your session teachings for September. So you'll have a whole lot of information about this and why it did what it did here. New Zealand dollar also trading softer as well. Coming down here, closing in its void, all the way down here. So whenever you see these exposed areas like that, just think of that as the market's going to want to come back to that eventually. It doesn't have to happen right away, but eventually they'll want to come back and close those types of events in. So let's take a look at CAD. All right, so we have all our notations from the other day. We're going to remove all this now. Okay, about 5 minutes until the numbers release. And again, we don't care what the numbers are. I don't care what the actual determination is or what their expectations were, dovish, bearish, bullish, bearish for the currency. That doesn't matter to me. I'm just looking for the volatility that comes after the numbers hit the market. And then I'm going to see where the markets run for the liquidity. And that'll determine if there's an opportunity or not. And so what I'm looking at here is we have two candles here prior to the down move here. Now you can two candles here prior to the down move here. Now you can refine it into this level here, but initially I'm going to watch and see what we see when we hit this 130.15 level. Should we hit it at all, really? But I think that we're going to probably snap up there on the release, and then maybe we'll see some kind of a pullback. 4 hour, small little bearish order block right in here, which you probably noticed on the daily right in here as well. I wanted to pull it up and refine it at the 4 hour. So we have this level to watch. And when there's just a tiny little bit of a wick, like it is here, I'll use the low. But if it's a little bit more of a wick and there's a lot of body, I'll go to the body. You'll get rules about that too. What I'm thinking when I look at individual conditions. And more importantly, we have the range all the way up here. Remember, what is this? What's this right here? All this little area right in here. What is this? Exactly, liquidity void. So that means current price action's down here. Okay, so will this want to draw price up into these levels? Exactly, very good. Now it doesn't happen right away. Don't think that it has to happen right when you're sitting in front of the charts. You have to have things to line up to support the idea it's going to run there during the session you're watching. But ultimately, these levels like to get filled in, like we see here. This one here was a nice run up. I gotta hurry and put this one, and then we gotta focus. So all this quick run up here, okay, got filled in over here. So while it ran up, it ultimately came down and filled all that in. Look how much time it spent filling that in. All these wicks and bodies spent a lot of time filling all this in. Well, that same thing occurs up here. So we have that range to consider up here. So we'll be watching that. Now I don't always have those on the chart sometimes, and I'll probably forget while we're doing certain examples over the next couple of months. But when I'm referring to a void, that's what I'm looking at. I'm looking at how the market will look to seek the liquidity within those two price levels, defining the range or the liquidity void here. All right, so we're a minute away from the release. Let's go down to a 15-minute time frame. Let's just go with 30-minute. Yeah, it's much better. All right, so we excuse me, we had a little bit of movement out of an order block in here. We have a small little void in here, so we could watch for if it drops down on the numbers. If it comes down there, it might hit that, and we'll see if there's a reaction there, and then run to one of these order blocks, or it runs up to the first one here. We want to see if it wants to expand and look right here on the 30-minute. There's a reason why I picked this chart here. It's much more defined here. There's a gap right in there, right up here. So you want to focus there, right in here. That's an exposed little area right there. And you see, you draw that out in time as you look at the chart. You don't want to clutter it up, have too many things on it. You want to keep your charts real clean. But if we get a run up in spikes, we want to watch that level at 30.70. So far lackluster, not much movement. Let's take a look at dollar real quick. Dollar still supports a run on this range in here. Euro's falling, cable softer, CAD still looks like it wants to push through. What I'm taking you through on a daily basis is to build your experience level with understanding what the market will want to seek, and because of repetition, you'll see these things unfolding in your own mind before they happen, and you'll find yourself agreeing, and sometimes not agreeing with what I expect in the marketplace, but your experience level of knowing what to look for or what makes a level or a setup of any interest, that comes by experience being in the charts. So I'm forcing you all to do the very thing that you've probably been avoiding doing since you first introduced yourself to my work. Okay, we should see expansion in here now. That means the range should get bigger. Has anyone been keeping tabs on how many pips the liquidity studies have been producing? They're not buys and sells now. They're just ranges where we anticipated movement. Exactly. So that's what I'm trying to tell you. It's not. It's very fruitful to do this. And that's what you should be doing as well every day when you're practicing and you're looking for runs on liquidity. That means running to order blocks, running where the stops are, or closing in ranges back to fair value. When you're doing these studies, you're going to log how much of movement was available and what time frame you were monitoring and what the idea was framed on. What time frame was that? Was it a daily setup? Was it a 4-hour, 1 hour, or was it in a small session time frame, like a 15-minute time frame or 5-minute? They would be really limited just the scope of trading a specific kill zone, like a London Open kill zone or a New York kill zone. Now think about all that open space right in here. Very little trading was happening in here, but now combine that with all this back and forth type of action. Okay. Think of it like, how many of you ever painted your own house? Like, say you took a paintbrush and you painted your own bedroom or your living room or something like that. You ever paint something inside your house? So when you dip the paintbrush inside the paint and you start stroking across the wall and you're coating the wall with the paint, over time, unless you put more paint on the brush, there'll be spaces where the paint didn't really cover. And you're going to have to come back there and paint that over again. That's what a liquidity void is, essentially. That's how I teach it to my kids. So when we're painting over here with price, this area in here leaves like a little space where it needs to be recovered. And that's really all this is going to do. It's going to want to come up there and close all that in because there was not efficient price movement in here, and the delivery wasn't efficient. So if we get expansion, the first thing we're going to be looking for as a price action trader is we want to see if it has the willingness to get up there. Now, it's Friday. It's a little bit of a range. It's about a 100 pip run. And To me personally, I would have rather seen it take off a lot faster than it has here, but it still could just creep up there as we get through each one of these order blocks and levels we defined. I really like the fact that we supported and recapitalized the buying in here on this order block here, the down candle right for this move up in here. I like that we seen more buying in there. And they've expanded the range. So we're well ahead of yesterday's high, and we took out what looks like the weekly high. So we've created a new weekly high here. So, and we're in the 130 big figure. So we have every reason to allow price, or let's expect or anticipate price to expand, because we've taken out any near-term barrier with the weekly high, the previous day's highs. We've had a nice little double bottom type thing in here, but it came by way of a rejection, which is really strong. We watched this occur live, outlined it before it happened, and it was really nice. And we saw last night in the video that I put on the forum. Return back to the breaker here. They that was an inversion level. So what they used to sell off the market to run the stops below it, they mitigated that. So if they're in a hurry to mitigate that, that is indicative of what? Lower prices, if they're covering their shorts, or higher prices. And that's what you're seeing here in price. Now, as you spend more days with me, as the weeks go by, you're going to learn the desire you're having right now as a new person coming in, or a new trader. The impulse is you want to give me buy signals, give me sell signals, give me in, give me out. And that's not going to help you. As much as you think it will, it won't. You want to be able to understand why the setup's there. And you need to start by understanding where the market's wanting to be going first. Everybody has to contend with where the current market price is, but not all of us spend that much time trying to figure out where it wants to go. We're too focused on give me the buy, give me the sell. Well, where's the reasons for those signals to even be there? If there's no framework or context around that, you're just chasing price, and you're creating scenarios in your mind that may or may not even be there. There will be opportunities galore. There are lots of opportunities coming, but I have to give you a foundation to understand what it is that we look for that frames the setups, because there's going to be times when we will be invariably trading with, okay, I'll just give you a heads up. There are high resistance liquidity runs, and then there are low resistance liquidity runs. And I'm going to have you all do exercises where we actually buy or sell in both of those conditions, and I'm going to outline what that is before we do it. It's not like a trick question where I say, okay, we're going to buy here, and if it doesn't pan out, well, that was just to see if you thought it was going to work. That's not what we're doing. I'm going to outline a model for high resistance liquidity runs, and then you'll learn what that is. I'm not teaching it here today. And you'll have a teaching on low resistance liquidity runs. There's a distinction between the two, and you need to know what those distinctions are. And the only way you learn it is by getting in there and doing the trades in those environments. And by exposing yourself to that, you're going to see not all buy signals are going to be as strong or as effective or explosive, snappy, real punchy, real entry, sensitive, where as soon as you get in it takes off. That's what we're aiming for. We don't want to get in a trade and it just hangs around for a little while and we got to wait and decide if we want to hold on to it. If we're waiting to figure out if we want to hold on to the trade, I'm already getting out of the trade. Either I'm getting in the trade and I'm seeing feedback almost immediately, or I'm getting out of the trade. That's as simple as that. And you're going to learn there's a distinction between low resistance liquidity runs, which is where we trade for high probability, contrasted with high resistance liquidity runs, which is sometimes they look like they're really good setups, but as soon as you get them, it gives all kinds of indications it's not going to be there. So here's my concern. If I go right in there and start doing this right now without any understanding for you as a viewer or a student, say you come into the webinar 5 minutes late, okay, and it's a live session, and you hear me say, okay, we're buying here, and we're going to look for this. What are you going to do? You're going to over leverage your account because it's me saying I'm buying it, okay, and it may be a high resistance liquidity run that we're actually practicing in. You're going to walk away with, man, I lost on this trade, or it didn't work out like you said it was, and you missed the whole context of the discussion. So that's why it's important for you to understand when I talk about a setup, before I actually go into entries, I'm going to define it in terms of it's either high probability or it's medium probability, and then there's absolutely low probability. There is benefit to trading low probability setups as you're learning, because you want to be able to discern the distinctions between what makes it a high probability and low probability. It's not enough just saying, okay, this is high probability and only look for that. You need to know what it looks like and feels like to be in a move that's low probability, or what looks high probability, because all of them aren't all high probability 100% winners. They can start as a context or framework around the trade that looks strong and solid, but it dissolves. And if you don't pay attention to these telltale signs, you'll marry the vein, which means you're holding onto the trade and you're praying and hoping you're a Christian now. So all of a sudden you're praying to God, help me get this trade paying out. You don't need to do that. Just stop, collapse the trade, and move to the sidelines and wait for a new setup. But you can't learn that without having some foundation of what it is that we hunt. So yes, there will be opportunities for you to flourish as a trader. Let's just put it that way. I'm not going to use the term you use, Tony. Okay, let's take a real quick peek over at cable. Cable's still sideways. Fiber's falling out of bed. You want to watch this area right in here. Now euro pound. I would have rather come up there a little bit more to hit that. If it would hit that bearish order block there, that would have been a little bit better for me. Yeah, it just fell short, so that would not be something I'd be looking to get into. US CAD. So far, we've had a high of 130.05. Just fell back below the 130 big figure. Doesn't mean it can't run it and expand more. Sometimes it'll just peek its head above the big figure, give like a red herring, feeling like it wants to reverse, and it can, but generally when it runs into a big figure, it'll always have a little bit of retracement and then just explode through it. If it's bullish, it should just start running through it. It shouldn't go back down below 129.80, that's for sure. If it does that, then we got to consider it as a unlikely condition for it to get up here and close in this void. It's Tuesday, that's a void. Sebastian. Yeah, that's a void. We mentioned that earlier when we were talking about what was I looking at? Oh, the CAD. We were talking about this being a liquidity void. We were talking about the dollar having a liquidity void in here. And again, just think of like when you're painting your house and you're applying the paintbrush to the wall. Eventually, when you run out of paint, okay, it creates these little pockets of space that need to be repainted over. Just think of these big long runs down or runs up like this, like it did here. Perfect example of it. Price moves real quick down, it moves below these lows. All of this has got to be covered back in, and it does it right there. It goes right back up and closes at the bottom of these candles, and then it goes down. So you got to be thinking, well, that's what I outlined on the chart CV. He's asking why wouldn't we expect this to, I would have liked to seen it trade down here, but because of the discussions that's going on in the euro, um, in the FOMC talking, it could break down later on today. But that's what I'd like to see that happen. I don't like to see this formation here. This looks like a rather long extended sell model, and we're probably at a redistribution point here, and they'll come back down and take us back into the consolidation over here. Um, I'm honestly, like I've already said this, cable's been my best friend for years. It's been my buddy, and Brexit has really cooled my jets with it. I just don't trust the order flow in it. It's not clean. It's very erratic right now, and I don't know, I don't know what to make of it personally. So, and I'm wearing my weakness on my sleeve with you all, and I've done this openly. I think I did one or two videos in the public arena before we went to a premium group. That cable has me a little perplexed right now, which is forcing me to go into other pairs, which is fine because it's really good for you as a student. You're actually learning that it's not just London Open Kill Zone fiber and cable stuff that I trade. I think that all of these voids will eventually be closed in. Now we're going back to 130 big figure on CAD. And if we get back above 130 big figure, we don't want to see it lose 129.90. Preferably, we don't want to see it go back below 130. If it expands and makes a new higher high today, and today's high so far is 130.05. So if we get back over 130.05 and we expand, say it takes out the next 10 round level, in other words 130.10, if we get back above that level, we don't want to see 130 give up. We want to see it stay above it. If it shows a willingness to want to get back below it, that's not good, and then they're probably going to look to close in this void here. So high impact news should propel price with strength, with quickness, and a willingness to get to some known price level. What is that known price level? It's going to be a order block above or below the current market action. And again, that's why I'm saying it could be both sides. I don't care what the report is. I should already have an expectation where the market is looking to go. And we didn't talk about down here stuff. We're looking primarily up in here. And the reasons why is this is an area where it's been very inefficient in terms of delivering price. So the offering of price in here wasn't as efficient as it was like in something like this, where it spends a lot of back and forth time. All these price levels have a lot of opportunity to be traded at. It spends a great deal of time hemming and hawing back and forth, back and forth. Anyone lose the audio? Yeah, it just might be you, Mike. Okay, so we're over 130 again, so we want to be monitoring, keeping an eye on that. Since now we're in 130, okay, the algo should want to expand, okay, and squeeze on anybody that is short. And once the run starts happening, it should expand and speed up in magnitude. Excuse me. If it doesn't, then all we did was priced in the high of the week, and we'll trade off and settle down below the lows here at, what is that? $129.40. So we certainly don't want to see the CAD lose that, because if we break down here, that leaves this void for a much longer term setup, which is not good. We want to, as we're approaching closer and closer to this, it gets so much more high probability that it's going to run for this to close that in. The question is, would I be less confident about it if the dollar didn't have that same void as well? Well, it's a dollar-based pair, so it's going to have in some ways very similar price action. If there's a lot of drop in here, we're going to see similar effects in the dollar as well. So it's already going to be built in, which is the reason why these conditions repeat themselves, because it's very generic stuff, but not generic in the sense that it's retail minded. It's generic in the scope that that's how price is delivered. So it needs to go back up here and close all that in. I reference, the question is, do I look at oil when I'm looking at Canadian dollar? I look at it when it's a little bit more stronger. Let me rephrase that. I look at oil when it's a setup that's based on a short-term or swing trade mentality. These are all day trading models, and some of you folks I've had a guy quit yesterday because he's like, look, I can't day trade. I need the longer term stuff. And I told him, I said, we're going to be covering all that, but the reason why I'm teaching in the scope of intraday is because intraday gives us immediate feedback. It gives us a lot of price action from beginning to end. It gives me context. It gives me framework to teach. And if I took the reference of time, in other words, if you couldn't see this was a 30-minute chart and I didn't tell you this was US CAD, you wouldn't, unless you were really paying attention to the Canadian dollar, you wouldn't know if this was a 30-minute chart, 5-minute chart, or 1-minute chart, or a monthly chart. You wouldn't know unless you had already been paying attention to what the pair is. So my point in this is to teach you, number one, price action is universal. So the myopic new students that are coming in, and I don't mean that to be high and lofty looking down on anybody, it's just the truth. I had the same cynical view as well. I was very suspect of Larry Williams when he said he made $1 million in a year at $10,000 until I found out that it was true. But I appreciate healthy skepticism, and that's the reason why we're doing this on a daily basis, giving you reasons to trust what I'm sharing. Number two, prove that I know what I'm talking about, and removing all that uncertainty, because it's going to be a problem for you. Believe me, some of you still are on the fence about whether I can trade, and that's normal. That's fine. You're not here to watch me trade. You're here to learn how to trade yourself, and you're going to learn it every single day. But you need to release this desire that you have to have what you're wanting right now, because you don't even know what you're about to learn over the scope of 12 months. If you're going to, and that just gives a testimony to what is the barriers for most traders, is no one goes into trading to be a good trader for a day or a week or 1 month. Did you all sign up to start trading Forex just for 30 days? When you got involved, when you opened up your first demo account, did you say, I'm only going to do this for 30 days? Of course not. I mean, you want to make a business out of this. You want to trade, you want to quit your job, you want to have a passive income, you want to have a supplemental secondary income. So when we go into a new learning experience, whether it be with me or someone else, it doesn't have to be me. Okay, you guys can subscribe to whoever you want to put money behind, that's fine. But when you do this, and the outline is it's going to be a model that's going to require your 12-month study. I understand the interest of going in and seeing if it's worth it, and that's why I'm spending on a daily basis showing you where the market's going to go. You're all saying, give me the entry to get in there to trade that, and I'm telling you, you're waiting for that, because that's not going to help you, and that's not changed from the free material. Giving you entries and exits is not helping you. Now, your argument's going to be, well, it'll help me pay for the cost of the course. If you need that, you are in the wrong place, because if you can't afford $150, you cannot afford to trade, because you're going to lose $150 a lot. When you're trading real money, you're going to lose that a lot. It's going to happen. So watch the expansion. We just made a new high. So now the algo has all the room now to expand on the outside. Watch the 10 level. Okay, so now we should not see it move back below 130. Now, while you're learning this stuff and practicing, you want to put little reference points to keep it in mind, because it's easy sometimes to get wrapped up in the price action when it starts moving and forgetting all about what the things you're actually supposed to be studying. Okay, so we want to see price stay above that. Andreas, this is the reason why I'm telling everyone to follow along in the same demo account, which is the Forex LTD. So if you're not following along in the sessions, then you're going to distract yourself. Only focus in on this one because it's going to be the same delivery of price. I was getting to that, Pavel. All right, so now since we already cleared out the weekly high, we made a new high. Okay, so we've expanded above Sunday's opening range for the week, and that comes in the form of 129.99. We went through the big figure 130 even. Now this is the second pass through it, and I'll give you an example of what that means. If we look at a 5-minute chart, here's that 130 big figure level right here, that little short segment of time, or line rather, I put on there. We punched through it here, made the high of 130.05. Retraced a little bit, went back below it, now we expanded through it again. If it's good, if it's going to be a run for higher prices, it will not need to go back below that 130 big figure, even to go back into the order block here. We don't want to see that. We want to see it open itself up to higher prices right now, because there's really no resistance here. So if it's going to drop here, it's going to create a near-term resistance. And what happen? High probability conditions are, once it's cleared its near-term resistance, it needs to expand and go higher. We cannot allow it to go lower from here. So if we are in a trade, and we're not saying that we are, we're understanding where the market's wanting to reach. And what keeps that move likely to unfold is by studying all these little mile markers as the price goes through them. And we have a new weekly high. We've cleared a big figure. Let's go back out to the 30-minute chart. Okay, so we've expanded on the heels of a high impact news event. We have a lot of time still for today. Okay, we have a bearish order block at 130.15 that we have to contend with. So we want to watch it drive right through that. We don't want to see any kind of resistance there. We don't want to see any kind of, well, let me hit that and stay there for a little while. We want to see strength to go through that. If we see it run through that, then obviously we can just sit back and wait, because it will fill in that void then. If it hits that level here we've outlined and it starts consolidating, okay, again, those things affect the probability of the trade, because the longer it spends time here, that battery life on the daily range, which closes and turns off around noon in New York time, that makes the probabilities for these ranges to close in the session you're trading less likely. So that's the reason why we want to make sure it should not go back below 130. If it does, the probabilities for it to get back up into here today fall off precipitously. Does that make sense, Pavel? My pleasure. All right, so anyway, my discussion earlier as we're watching price, and this is the other reason why I'm teaching in a demo account. I get a lot of questions, why am I teaching in a demo account? Why am I not doing live trading? Number one, if I'm doing live trading, you're going to see my account information, and I don't share that with anybody. So, two, because there's no skin on the line with me talking, it frees me up. There's no actual money tied to any of the things. So it gives me clarity. It gives me just freedom to talk about it, because I could not talk like this with my real money at risk, because I don't trade mini lots and micro lots and just one standard lot. I'm trading large size. So I have something at risk, and I could not be able to focus talking to you while I had money at risk. So exactly, I got to have the detachment from money, just like anybody else. I'm not exempt to that. So when you're learning this, especially as a new student, okay, your expectation is this. Okay, well, you're teaching me. Let me learn how to get entries, and I'll pay for the course as I'll learn as I go. Okay, you're going to do that by default without me even saying that. I'd never put that in the sales pitch. But if we tell you on a daily basis where the probabilities are for the market to go to, even in the free work that I've already produced, that's enough right there to get you what you need. And I'm not going to tell you what I mean by that. You know exactly what I'm referring to without having to say the words. But I want you to spend at least a couple weeks with me initially just to see that there is a continuity to the delivery of price that we will understand together. I understand it independently now. You'll learn because you're spending time with me every single day, something that no one's ever had the opportunity to do with me. They've only spent a week with me. And this is what we did on a weekly basis. Not this much talking, but I gave them the ideas of where the market should go, and we would watch it unfold. They would ask questions. They would do all the talking. But because I don't have that medium where you can, well, you are asking me, some of the questions don't really have any basis to what we're speaking about here. Some of you are just giving comments, and again, you're asking for where would I be buying here, where would I be selling. You need to settle down, and if you're requiring that, you're probably not in the right place. And that's what we had yesterday. A gentleman gave up the membership because he said this isn't the right format for me, and he just wasn't willing to wait. So, and that's fine. I don't want anybody in here that's going to be impatient. If you're going to be impatient, just quit. Just cancel the subscription, and you'll be fine. I'm not going to be mad. I want you to get what you want, but you need to wait for the delivery of what you want, because you don't even know what you want. Especially as a new trader, you have no idea what it is that you should be doing. But I do know what you should be doing. So if you're gonna make me your mentor, submit to that, because I know honestly what's best for you. You don't know what's best for you. You think you do, but you don't. You don't even know what you should know, and that's a very deep statement. You don't know what you think you should know. You don't even know. How can you relate that to, okay, well, I'm not getting value? So just think in terms of that. Every single day we're sitting down. We're sitting down in front of the charts, and I'm teaching you exactly what real jade looks like. Just like that young man in the parable. The man puts that green stone in his hand. Okay, the whole time he was holding a real piece of jade. And the one moment when he thought he wasn't learning anything, the jade master throws him just an old regular green rock. And he says, this ain't jade. And suddenly he discovered all along he's been doing things that didn't make sense to him. Sweeping the floor, cleaning up after this guy, listening to rants that have nothing to do with the actual chart that you're looking at. But you're learning tons of stuff. You have no idea what you're learning until you look at it on your own. And then you're exposed to seeing things over and over again, and it'll make sense to you. When you start looking at the charts, you say, this looks like that one time when ICT was talking about this or that happening. And then all of a sudden, you'll be able to refer back to experience that you didn't realize you had. Everybody saying Miyagi and Karate Kid. If you could have saw everybody on the same time on the questions tab, I can only see that. No one else can see it. But the everybody's firing off Mr. Miyagi and Karate Kid, wax on, wax off. So anyway, that's the reason why I'm teaching the way it is. I'm teaching because I want you to know that there is a lot of repetition to this stuff. Yeah, this looks like it wants to at least come down here and hit that 3270 level. Fiber is really soft, hit the stops already. That's nice. Dollar still wanting to expand up, almost closing in this range as well. Don't want to see it go back below 130. That's not what we want to see. All right, folks, I'm going to break this one here and leave you to study it the rest of the morning. I'll follow along on Twitter to chart form only. But again, we want to watch that 130 level. Don't want to see it give up. And we're aiming for this little area right up in here. If it gets to that, it might just come up here and hit that 130.85. But at least try to get up into this range here. All right, folks, I will catch up with you later on through Twitter. Have yourself a very safe and pleasant weekend, and you'll get some more information in the form of 2 teachings as well. Until I see you again, good luck, good trading.